Well, I'll remind you, in case you missed it, we did get some export inspection numbers out this morning, and USDA said that, well, on the corn, we had pretty decent export shipments again on corn, 1.48 million tons against the 1.61 million a week ago. Soybeans, 175,359. Of course, seasonally, they are very weak right now, but it was still better than what we had a week ago when it was 129,000. The wheat at 548,578 would be a notch above the 499,000 that we had the week before. And then don't forget, we had that overnight export sale announced today, 456,000 tons of soybeans that were sold mainly to China, but also to unknown destinations. Did it help the market? Well, it kind of seemed to, but after a lower open, let's take a look at where we now stand. On the corn, nearby July corn, with our quotes provided by bar chart, it's trading at 663. That's just a penny from the high of the day and now 7 3/4 higher. December, 3 cents lower at 563 3/4. Make that 2.5 lower now as it keeps edging upward. Now on the soybean trade, as I mentioned, we had double-digit losses last night. Well, now look at it. July, 21.5 higher at 1417.5. November, 6 3/4 higher. We're at 1319 3/4, and that is basically 40 cents off of our overnight low. So quite a turnaround going on here. In the wheat market, we had some steep losses in the wheat market overnight too. July Chicago wheat now 8 1/4 higher at 671, and that would put us 25 cents off of our earlier low. In the Kansas City market, July is now at 607. That's up a half cent. Same story there, a big rebound off its low. And July Minneapolis wheat now 11 higher at 773.5. Let's go to Todd Bubba Horowitz of BubbaTrading.com in Chicago. Boy, things really perking up after we got this market opened up, and it seemed to be in the dumps here early on today, but it didn't last very long. So what's going on right now?
Good morning, Marlon. Well, look, as I've mentioned and continue to tell you, these times of year are going to be lots of volatility, especially at these much higher prices. You know, we've got so many things that affect these markets back and forth that we're going to see all kinds of wild moves. Now, we're still slightly negative on the grain markets here. Again, I want to be bullish. I think they're going a lot higher, but I think we're going to see some pullback here and some pressure. And these rallies are going to come. These are, known as dead cat bounces. And, when you go back and look at the selling from last week, that means that, bounces are going to be a natural. But volatility is going to be the key. And these wild swings will not be surprising as we go forward. I mean, I think you can expect this on a regular basis to see big ups met with sellers and big downs met with buyers. And I think we're going to continue to see this churn at least for the next few weeks.
Todd, we have option expiration coming up on Friday. Does that play a role in anything this week?
It will play a role probably in July. Again, we have the July futures, in delivery. And of course, that always has the opportunity or the possibility of creating some extra movement. That's a big thing. And part of this rally could be due to that. Now, I don't know that yet, but certainly you do see big swings when we have options expiration tied into delivery, and we could see some wild swings coming forward. And I guess we just have to see how it plays out. But either way, they could make a big move one way or the other based on what goes on in the options expiration.
Okay, Todd, we're going to take a break here, and then when we come back, I want to ask you about the fund positioning, how that maybe changed last week, and we'll take a look at our livestock trade coming up next. We're talking with Todd Bubba Horowitz right now. He's with BubbaTrading.com. And Todd, I always like to visit with you about maybe the positioning in the markets and the attitude in the markets. That can lead to a lot of market movement. And we all know that the big commodity funds have been really heavily long, for example, in the corn. They've been not quite as long in the soybeans, but also they had positions in livestock. And I just wondered what you think they did last week overall in shifting of positions, and if that matters much today or not.
Well, I don't know if it matters today. I mean, it might matter eventually, but I think you can see by the price action that they puked out quite a bit, especially in whatever they had in soybeans. You don't get corn and soybean moves down, 25 and then 40 cents back to back in corn and $1.23 in soybeans. And you know that when you see that type of selling, that isn't small guys selling. Those are the funds that are panicking and puking out positions because they don't want to give up the potential profits they might have made going forward. So that was surely some fund shifting. Now, I think they realize and they've made a mistake, and they'll probably look to get back in, pretty much across the board. And I think you also saw that kind of action in the hog market. Hogs, you could say, are maybe barbecued now. When hogs go over cattle, which was the case for a while this year, that's a pretty negative sign that hogs have probably reached their peak and that cattle's probably bottoming. And I think that would be a great way to play it here, long cattle, short hogs.
Yeah, the lean hogs are under pressure, and we had the August for a little bit this morning, actually hitting limit down. They're back to trading. They're $2.50 lower on the August at 104.15, but everything is at least $1.12 lower on the minus side here. So a lot of pressure in the hogs, and this is, as you say, this is one of those commodities where the funds had accumulated some significant long positions there. So a lot of pressure in the hogs, lots of gaps being left on the way down. Don't know, there is getting to be so many of them, don't know if it even means much anymore. Live cattle trade is lower. August, down 82 cents at 120.72. And on the feeder cattle market, they tried to start out higher early, but faded. And now August is down 97 at 154.05. What does that turnaround mean?
Well, I think that the cattle looks pretty good, actually. And I think that to address your quick question on the gaps in the chart in hogs, you're going to see some rip rallies. We'll see some limit up moves here, in the next couple of days probably in hogs, but that's just, again, what we call the old dead cat bounce or the rip your face off type rally, just to trap the shorts that continue to sell. So you're going to get some big rallies to fill some of those gaps on the way down. But overall, I think the pattern has shifted in hogs to lower, and the pattern has shifted in meats and cattle, both fats and feeders, to higher. And I think that's what we're going to see going forward. But overall, I think the entire complex looks great, and I think it's going to be a real good second half of the year for farmers and for everybody. So I think it all is pointing in a real good direction.
Interesting perspective. Thank you, Todd, for joining us today. Always good to talk to you. Todd Bubba Horowitz of BubbaTrading.com in Chicago. Tammy, with that, I will turn it back to you.